Hey, it's Rav. Welcome to the Everyday Investor, the hottest investment show in the world. I said it. I don't care who knows it. We've got a great show. You see, often people are asking me about interest rates. They're asking me about mortgages. They're asking me about private lending. Well, why ask Rav when we can go to Kyle Ford, who partners with us. He'll explain all the different ins and outs. We're filled with questions all the time. Don't go anywhere. We'll be right back.
Why are these investor clients that we talked about, who are making great money on real estate, borrowing money from you, the lender, at rates between 11 and 13%?
Hey everyone, it's Ken Beekendam from LegalSecondSuites.com, and I want to talk to you guys today about garden units, garden suites, laneway houses, coach houses, secondary dwelling unit detached. They do go by a lot of different names. Lots of municipalities are coming up with their own definitions of what these are. But what you need to understand is that the province is now allowing them in your backyard. So if you're looking at ways to provide an additional living space, could be for one of your family members, maybe your in-laws, could be your parents, maybe it's to generate extra rental income. Take a look at your backyard space and see if you can actually fit one in there. You have to check your zoning bylaws for the setbacks and the size. And again, it's got to meet Ontario Building Code. To learn more about garden units and second suites and coach houses and laneway houses and all of these types of units, please check us out at LegalSecondSuites.com. And feel free to download the checklist as well at LegalSecondSuites.com/checklist. See you guys next week.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey guys, Omar Khan here from Theta Trading, and today's topic is crypto. I get asked this question often. Hey Omar, do you invest in cryptocurrencies? And for me, the answer is no. I don't invest in anything that I am not comfortable with and that I do not fully understand. So for me, the world of crypto, and this may change down the road, but for me, at this point in time, it's still a very abstract concept. I don't understand the utility, and because of that reason, I find that there's better risk-adjusted returns that I can have elsewhere, and for that reason alone, I stay out. Now, that does not mean it's not the right investment for you, and I'll cite something that Warren Buffett said over the weekend, which again is a bit of a concern area for him. The Berkshire Hathaway annual meeting just happened this past weekend in Omaha, Nebraska, and Warren Buffett said that he wouldn't buy all the Bitcoin in the world, for $25. Now, that's his opinion. My opinion is I don't know enough about it, therefore I'm out. You make your opinion, but always, always understand what you're investing in and why you're investing in it. See you guys next week.
Hey, what's going on? My name's Kyle Ford from the Kyle Ford Mortgage team, Canada's mortgage choice. As mentioned, I'm the in-house mortgage specialist here to help answer all your questions around mortgages and private lending. I'd like to take a chance to introduce myself and help let you know how I got here and why I'm so passionate about this space and private lending. To start, I've been investing in real estate and in the financial services industry for just over a decade. I got my start originally as an independent financial advisor working in the traditional financial planning space. This is RRSPs, paying down your mortgage, paying off your debt, and planning out for retirement. In the space, as a young man, I learned a ton. I got an opportunity to sit down and work with some of the people that I admired the most and had what I believed a great financial future. Though I was passionate about it and excited about it, I also saw some things that started to scare me. People that I thought were in a good position were going towards retirement and looking like they were going to need to take a pay cut, downsize, or not live the lifestyle that they had really dreamed about. That's where I started looking beyond the traditional financial advising scope. I started looking at real estate as a vehicle to drive and grow your wealth, so when it came to retirement, you didn't need to downsize. You didn't need to take a pay cut. And you had the ability to do what you want when you want it. So I started, like a lot of people, with small stuff. I bought a pre-construction condo and a single family home. From there, year over year, I started to grow and scale. I started to look at small multifamilies, purpose-built triplexes. I then got into bigger apartment buildings, up to 10-unit apartment buildings. Throughout that period, I also tried other strategies like flipping, looking at rent-to-own or lease options. As I was growing and scaling my portfolio, the one thing that became evidently clear to me is working inside the bank bubble, working inside of the traditional financing approach wasn't going to get me where I wanted to go. That's where I learned about and discovered private lending. After 6 years of working as an independent financial advisor, I sold my book of business. This happened on January 1st, 2018. For those of you who know the mortgage space, this was a significant date. This was a date when most people were turning away from, this was the date that the OFC introduced the mortgage stress test. When many other people were running away from the mortgage industry, I came at it head on. I wanted to find solutions that were going to work in today's modern mortgage world. So understanding that I needed private lending to grow my real estate portfolio, understanding that our government bodies were changing and tightening the mortgage space, I built what is now known as the Kyle Ford Mortgage Team as investor-focused mortgage brokers that are here to help Canadians accelerate their financial growth and buy more properties and invest in real estate in alternative, creative ways. Today, our team is 5 agents in total, plus an administrative team, as well as we do all types of lending, from A-rate bank lending to B alternative lending, MIC and mortgage corporations, as well as one thing that I want to talk about today, which is private lending. This has allowed me and my partners and business associates to grow our real estate portfolio to the point where when it comes to retirement, we're not going to have to take a pay cut, we're not going to have to downsize, and we're going to be able to provide for the people that care about us most. So today, what I want to talk about is private lending. The first question, and it might seem like a basic one, is what is private lending? Private lending is the ability for individuals to lend their own cash registered accounts, retained earnings in private mortgages. Now, in a traditional lending environment, we go to the bank, we sit down, we give all of our paperwork, and the bank qualifies us for what fits within their guidelines. In the private lending space, though there are guidelines, those guidelines are often quite a bit different. The bank is concerned about your income. How much income do you have? How much you can borrow. A private lender is generally more concerned about the equity. How much equity is in this property, and is the value that I'm lending against secure or less than the value of the property? As a private lender, we're often not as concerned about how long you've been at your job or what your last year tax return said. We're more concerned about, do you have the ability to make the payment? Do you have the ability to exit from the property? And is my loan that I'm lending on the property secure? So one of the next main questions that we get asked is, who are we lending to? So when it comes to private lending, there are 2 main types. We have what I call consumer lending, or investor lending. So when we talk about the differences between these two, I want to be able to give you examples here. So in a consumer lending space, we're going to say we have a house that's worth $1 million, and the current mortgage on that house is going to be $700,000. So that's the first mortgage. So the value of the home is $1 million, the value is $1 million, and the mortgage is $700,000. In a consumer lending situation, our clients, we're going to call them the elusive Bob and Mary, have got themselves into a little bit of financial hardship. Bob has lost his job, and with some of the expenses they have, their car loans, their student debt, their other expenses, they're about $200,000 behind in credit card and LOC debt. Now, because of all of this debt here, their monthly payments and expenses are quite high. So in a consumer lending situation, Bob and Mary will go to their mortgage broker, and their mortgage broker will say, hey, listen, we can't refinance this in here because you have too much outside debt, your credit's hurt, Bob lost his job. But what we can do is we can get a $200,000 second mortgage at, let's say, 12%. And what that will do is it will pay out all of the credit cards and line of credits, and you'll have a single monthly payment, and all of your other expenses, all of your other debt are paid out. So your credit score will go back up, and you'll have one monthly payment. Is this the right thing for the consumer client? Yes, it probably is. And as a lender, if we have the ability to lend our money at $200,000, or we lend our $200,000 at 12%, that's a great rate of return. Here's the downside to consumer lending. In the event that you lend your money to the consumer here, and they are unable to make your payment, in order to recoup your investment, you're going to have to force the sale of the home, which after they pay out the first mortgage of $700,000, there will be enough equity to pay out your $200,000 loan. Now, business is business. If this person is unable to make the loan, you need to protect your investment and you need to force the sale. The downside of this is in order to do that, often you have to kick a family out of their house, and you're in a position where at the end of this, they might not be too happy with you. Here's the difference between consumer and investor lending. On the investor side, we're gonna have a client who has a $1 million, let's say, sixplex. They're gonna go to the bank and they're gonna get the same $700,000 first mortgage. In this scenario, our investor client is going to borrow the same $200,000 second mortgage, and at the exact same 12%. The key difference here is our investor side, they're going to take this $200,000 second mortgage and invest it into the property. That $200,000 investment into the sixplex is going to increase the value of the property. Let's say they spend $200,000 and the lift they get, the new value of the sixplex becomes $1.3 million, we'll say. So they've invested your $200,000 into a $1 million property, and we're saying that after they invested that $200,000, it's now worth $1.3 million. Here's the great news. This investor has a clear exit strategy. They've now increased to $1.3 million, which means they can get a new mortgage of approximately $960,000. And when they get that new $960,000 mortgage, they pay out the existing first, they pay out the second, and they put a little bit of money in their own pocket. Here's the great news. Once this investor has been paid back the $200,000, once the investor paid you back that $200,000, they now want to borrow your money again for the next deal. This gives you the ability to build a win-win relationship with investors and lenders to continually keep your money invested. On this side, if the deal goes sideways and something goes wrong, we're not kicking a family out of their home. The investor, it just needs to pay back the loan. It gets sold to another investor. Versus over here, if the deal goes sideways, we need to now, as I mentioned, kick a family out of the house to get the money back. So though the rate of return is the same on either side, when it comes to working with myself and the Kyle Ford mortgage team, we only deal in the investor space. You can make great money lending to consumers. Sometimes you can even charge higher rates. But in the event of a problem, it's just not the space that we want to be in, and it's not the type of money that we want to lend. So this is an investor lending. Now, the main question I get from here is why are they borrowing at these high rates? It's a great question, and we're going to answer that when we get back. Don't go anywhere.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Costas Cavellos, founder of First Access Condos. Now, in our world, there are numerous investment opportunities and schemes that people pitch to you daily. Which one do you choose? Which one is right for you? Now, when it comes to investing, you want to invest in something that there's a great demand for, but not enough supply. And everyone knows, in Southern Ontario, the one thing that's in short supply is housing. First Access Condos lets you buy today and reap the benefits in the future. Pay today's prices to invest, sell at tomorrow's prices. That's the beauty of pre-construction condos, and we are First Access Condos.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hi, it's David Smith here from the Q Theta Fund with your investment tip of the week. Now, one of the things investing in the stock market is the stock market can actually go down, and it does quite often. But that's actually a good thing. In order for the stock market to go up over time, it has to come down at times. And there's reasons for that. Sometimes the market gets very speculative, bubbles can form, people get too excited in the short term and drives the market up higher than it really should be. When the market comes down, that actually kind of is a cleansing effect, and it allows things to settle down, which eventually lets the market go up higher over time. This is something you should understand, that it's not something to be afraid of, but something to embrace and be prepared that this will happen. So in order to make money over the long term, let the market come down in the short term from time to time. It becomes a healthy market, and it allows your investment and the market to grow, which is exactly what you're looking for. I'm David Smith, and that's your stock tip of the week.
Thanks and welcome back. Once again, this is Kyle from the Kyle Ford Mortgage team, and I'm answering questions on private lending today. Before break, we asked, why are these investor clients that we talked about, who are making great money on real estate, borrowing money from you, the lender, at rates between 11 and 13%? And the answer, there's multiple answers here. First of all, their rate of return is higher. What I'd like to do is I'd like to go back to the example I used before. We had an investor buy a $1 million sixplex. They put $300,000 down and borrowed $200,000 at 12% from you, the lender. In this example, the after repair value, the ARV, came in at $1.3 million. This means that on a $1 million purchase with $300,000 down and a $200,000 loan, there was a $100,000 lift in the property value, which means the total investment was $300,000, and the profit in total investment was $300,000, and the profit was $100,000. The real quick math on that is if we borrowed $300,000 and we made $100,000, that's a 33% ROI. And I apologize for my chicken scratch here. But so if we invested $300,000 and profited $100,000, the borrower's return was 33%. So the question is would you borrow money at 12% to make a 33% rate of return? Most borrowers are willing to do this in the investor space and often can even lift the value of the property higher, which can create a higher rate of return. The second part of this is this type of lending is typically beyond the bank's scope. A bank who just put a $300,000 or a $700,000 mortgage on this property with a $300,000 down payment is generally not going to lend you an additional $200,000 to do these value-added renovations. So by borrowing privately, it allows you to accelerate your real estate portfolio growth, buy more properties quicker, execute renovations faster, and grow and scale your portfolio to reach your goal sooner. So the question is why do people borrow this type of money at these rate of returns? The first one is their rate of return is higher after they borrow the money. And the second one is generally these type of loans are outside of the bank's scope. So the next question that you the lender will want to know is when do I get paid my interest and when do I get my principal back? As the lender in a private lending scenario, there are three ways to be paid: upfront, deferred, or paid monthly. If interest is paid up front, it means the entire amount of interest that you're lending in the term will be paid to you up front. If it's deferred, it will be paid to you at the end of term, but most commonly, it is paid monthly. So in the example that we've been using here, if you make a $200,000 loan at 12%, that equals $24,000 for the year. If we divide that number by 12, that equals $2,000 per month in interest. So if you make the loan on January 1st, your first payment will be February 1st, and you'll receive $2,000 a month thereafter. The next question is, okay, that's great. So I've lent my $200,000, I'm getting $2,000 a month. How do I get my principal back? And this is why it's so important. With investor lending, there needs to be a clear exit strategy. Often when it comes to consumer lending, there isn't a clear exit strategy. It's kind of a stopgap until the person can sell the house or maybe come into a windfall of cash via an inheritance. But when it comes to investor lending, this is the most important part. There needs to be a clear exit strategy. So if we look at that example again of a $1 million purchase, $700,000 first mortgage. So this is purchase price. This is first mortgage. And we said there was a $200,000 second. The ARV, the after repair value, was $1.3 million. And there's a total of these two numbers, $900,000 secured to the property. So that's these two numbers added together. So the question is, if the value is 1.3 million and we owe 900, is it realistic that we can get a refinance to pay this money? In Canada, we can refinance our properties up to 80% loan to value. As an investor-focused mortgage broker, I like to make sure my lenders have security. And in these scenarios, I like to see a 75% loan to value being the threshold that we look at to make sure we can exit. So I'll just use our calculator here. Don't worry, guys, I'm not texting Rav. 1.3 times 75%. So if we look at 1.3 million at a 75% LTV, that equals $975,000, which means there's a clear exit strategy. We purchased for $1 million, we borrowed 900 total, and our new value is 1.3 million. As I mentioned, in Canada, we can refinance up to 80% of the new value. So we're going to be a little bit more conservative and go to 75% loan to value, which means our borrower in this scenario can get a new mortgage for $975. That's enough money to discharge the existing first, pay back your second mortgage, and that investor is going to have $75,000 in their pocket, their loan paid back to you. And once again, on the investor space, this borrower, once you get paid back, is going to want to borrow again. And as a lender, our job is to keep our money moving and invested. We want to keep our loans out as long as they're current, up to date, and the borrower has clear exit strategies. Whenever we're paid back, we want to get that money back out to work again. So that's going to bring me to my next question. The next question that you'll have is, where do I find these opportunities? To find these opportunities, you want to start with a mortgage broker. You want to reach out to a mortgage broker that specializes in private money. As I mentioned a couple times throughout the show, there are two types of lending, consumer versus investor lending. If you call most mortgage brokers, they will have consumer lending opportunities. People who are in distressed scenarios who are looking to borrow cash. If this is the type of lending that you're comfortable and open to doing, you can reach out to many brokers out there and they will likely have the opportunity to help you. If you're looking for investor type lending, make sure to interview the mortgage broker. Ask them about the type of opportunities. Ask them about the downtime between deals. If I lend money once, how soon will I get it back out again? What are the terms? In the investor lending space, often you can see longer term lengths, 3 to 5 years. That may work for some people. For others, that might leave your principal invested for too long. So ask about what type of lending they have, the term lengths, and their track record in these type of loans. If you're looking for these opportunities, I'm absolutely happy to take on new lenders. Reach out to myself and the Kyle Ford mortgage team, and we can start by getting to know you a little bit better, your goals, short and long term, and see if this is a suitable investment opportunity for you. The final question is how do you get involved as the lender? To start, reach out to myself. Book a no obligation half-hour intro call where we can talk about a lot of the things that we've talked about today. Get to know you, your investment profile, making sure this is suitable, making sure you understand the risks, pros, cons, make sure there's an appropriate timeline for your lending, and really talk about some of the fears, questions, or concerns you might have. One of the most common questions is, this sounds too good to be true. Well, this private lending is one of the oldest, most tried and tested forms of investing. Some of the things that I've talked about today are the pros and the cons, but we want to make sure that you as a lender are comfortable understanding what we do, how we do it, and how you can get a good return secured on real estate. That's it for me. I had a great time today and looking forward to talking to each and every one of you if you have a chance to reach out to me. Thanks, and back to you, Rav.
And thank you guys for watching. Without you, we would not have a show. To watch this again, please go to everydayinvestor.com, click on episodes. You can watch this right on demand or any of our other shows. Until then, we'll see you next week, same time, same place. Also, we'll be doing a workshop, so make sure that you go and subscribe to our email list because we'll do a workshop on this topic, exclusively for everyday investors. Bye for now, honey. I love you. I'll be home soon.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.